My name's Josh Dalton. I'm the Sales and Marketing Director here at FinanSys. I'd like to try and keep today's session interactive. If you do have any questions as we go through today, please feel free to put those in the chat and I'll take them if I spot them as we go through. So we're going to be going through today how to select an accounting system, the process, hints and tips, and any questions that come up as we go through today as well. So just very briefly, who are we? So FinanSys, we are a reseller of two products. So we sell Infor Sun Systems. We're a gold reseller, which is the highest tier with Infor. That's based on our customer retention and taking customers live, etc. We're also a NetSuite solutions partner as well. So a couple of products that we resell. Sun Systems fits more on the financial management space, and then Oracle NetSuite fits on the enterprise resource planning or ERP side of things, designed to cover your whole business. So not just finance, covers everything from HR to operations to project management to warehouse management, inventory, e-commerce website management, the whole organization. We've got over 200 organizations that we work with globally. Although we're head officed in the UK, we've got offices all over the globe. So we've got customers as a result all over the globe as well. We've been working as an organization for the last 23 years, and we have very much a customer first approach to working with the organizations. It's quite nice to be able to say the first few organizations that signed up with us over 20 years ago are still customers of ours today. We do lots of training and webinar sessions, similar to what you're viewing today. This is obviously a focus on the new business side of things today, but we'll also, for customers, be running training sessions, making sure they help get the most out of the software, hints and tips sessions as well. So it doesn't just start and end on potential prospect side of things. It goes right the way through to making sure customers are up to date and getting the most out of the software. And then lastly, we offer 24-hour support to our customers. So that's enough about us. I'm going to dive in and start today's session. So today's agenda, we've got a few bullet points to cover. So the first of which is at what point should you evaluate your accounting software. We'll then move through on to the process that you should follow to select a new accounting system, what you should budget for, and considering that both from an enterprise resource planning as well as a financial management point of view, who you should include in the process, the best time of year to consider when you're switching, and we've got a few considerations around that I'll walk you through, how easy it is to switch accounting software, general hints and tips, and then any questions. As I said before, I'll try take questions as we go through the session today. So we'll jump straight in. So at what point should you evaluate your accounting solution? So there's a few considerations. The first of which is around simply you've outgrown your current software. We speak to a number of organizations where they are on QuickBooks Zero, sort of the tier 3, the smaller end of the market, and they don't handle volumes of transactions very well. There are soft limits within all of the lower end of the market solutions, whereby if you exceed certain thresholds on a daily, on a monthly basis, the system starts to run very slowly. And then on some systems, you just can't get to the data that you need access to. That sort of brings me on to the next point. Often we see on the smaller end of the market, a lot of organizations, they will be taking data out from a trial balance and account listing into Excel, manually manipulating that data, transforming it. And for some organizations, this takes them days, a month. I was speaking with an organization a couple of weeks ago where literally it wasn't until about day 18 of the working month before they could get management reports out to the organization. And at that point, you're coming up to 3 weeks old data that you're sharing across the organization. It's not in any way real time. Hence the point there. It's just not at your fingertips. Another common reason that we see is around integrating with other systems. So not being able to take data from other key business systems or export out data to other key systems. That could be things like your customer relationship management software, your CRM. It could be things like your property management, either as a hotel managing your property, or you're a property management company managing your rental portfolio, or maintenance of properties, or rental clients, etc. It could be HR software, payroll software, a whole myriad of different systems that will have transactional data going through them. If you're a charity, donor management, taking that that income data through into your accounting system. A lot of organizations that we talk to will either, unfortunately, be rekeying that data once a month into their accounting system, and that has a number of drawbacks. Potential risk of error there, potentially, depending on the data, risk of fraud if we're talking about procurement software and paying suppliers as an example. Bank details, potentially a risk there as well. Just lots of problems if you're doing that manually. And again, it comes back to that having access to your data. If you're only taking that data across once a month or once a quarter, you're not able to do regular reporting if the data is not in your accounting system. Another reason that we see is, surprisingly still today, is not being able to get access to the software without being in the office. Now, you would have thought in the day and age of where we are today and what's happened over the last 20 months or so, a lot of organizations would have resolved this already, but we're still talking to organizations where this is a problem. We had a hotel that we were speaking with last week, whereby they were having to have employees come into the office because their accounting software didn't support remote access. So this is a challenge we're still seeing with organizations, and it's another very good reason to consider your current accounting software. The final thing to mention is, and again, this is something we see fairly frequently, is your accountant saying it's time. So you might have an external accountant that you work with. Often they'll have recommendations, and I'll come on to this a little bit more later on today's session, but they'll often be able to give you advice with at the point that you need to move on to a new system. A lot of that will be down to some of the points that I've already mentioned above, but it could be a myriad of other reasons that we see as well. These are the most common, but we see reasons outside of this as well. Things like consolidation being another common one. Things like process management, being able to approve employee expenses, approve purchase invoices, those sort of process-based tasks, your accounting system not being able to support that is another key reason that we see for organizations looking to move as well. Another thing to consider, and this is something I talk fairly frequently about on LinkedIn, is what is the cost of not switching? Now, this is something that is often harder to quantify. Unless there's something clear like a new staff overhead, okay, the organization's grown, you've seen a 20, 30, 40% increase in revenue over the last few years. Every time you increase your revenue, you have to take on additional accounting staff, finance professionals to keep up with that growth. When you have to take on new heads, that's obviously a more clear cost, but there are also hidden costs that we see with organizations as well. Things like being able to keep a clear picture of your financial records. Again, this relating back to the previous slide, being able to get to the data, being able to produce monthly management reports on time, being able to produce ad hoc reports to answer questions you have as your management may do on a month-to-month basis. So that can be a key consideration. You also want to have a think about its potential impact on your business growth. Sometimes your system can be holding you back. If your system's got certain reporting limitations or transaction volume limitations, it could potentially be holding back your growth. It could also mean that you're not able to access insights from your data. You're not able to view and analyze the data that you have within your accounting system efficiently, and that can have an impact on your growth as well. Another key thing to have a think about is lack of budgeting and monitoring of control around spend. A lot of organizations that we talk with when they come to us looking to switch, they'll be having conversations with us around how manual their procurement process is. They'll have emails being forwarded around internally. They'll have Excel spreadsheets being passed around. They'll have invoices go missing, suppliers paid late, missed discounts for early payments, all that sort of stuff can cause headaches for you. It can also, if you don't have control over your procurement process and spend control, it can mean you can have people throughout the organization potentially not being aware that you have contracts in place with suppliers for certain things and going off and buying things without having that awareness of that contract you have in place. So another consideration there is the potential procurement costs that you have going on if they're not being closely monitored and tracked against budget. And the final thing to consider is around team time spent on menial tasks rather than adding value to the organization. There's a lot of talk around finance business partnering and finance being a partner to the wider business, being able to drive insights, being able to help departments make decisions, being able to identify potential insights to drive growth and potentially reduce costs. So rather than spending that time on manual data processing, chasing people up, taking data out into Excel, manually manipulating that data in Excel, you want to try and shift away from that manual process, focus into automating those tasks and processes. And there could be a cost to doing that if you continue on that manual path. So the main topic that we're going to be talking about today is the process that you should follow to select a new accounting system. There are a number of schools of thought. I've been working with organizations for over 11 years, helping them evaluate their accounting software, helping them upgrade onto a new system, helping them consider the options out there. Now, the first step that you'll want to do happens way before you engage with any supplier like us. It would be gathering a group of internal stakeholders that are relevant to the project and making sure you have that buy-in from the beginning. So people you want to have a think about are, probably goes without saying, but key members of the finance team. You'll want buy-in from senior finance members, CFO, finance manager, if that's not the position that you hold. But you'll also want to get wider buy-in. It could be members of the board. It could be department heads, it could be a procurement team if you have one internally, but making sure you have that buy-in from the beginning can be crucial. You don't want to go down the path of looking at a new accounting system. It's not an inconsiderable, it is not an insignificant spend that you'll be going through. At the lower end, you could be looking at an investment of £10,000 to £20,000 in first year, with an ongoing cost of £1,000 to £10,000 a year. But for the larger projects we work on, you can look at being into six-figure spend. So obviously it depends on the size of the organization, but making sure you have buy-in and being able to identify the challenges that you're currently facing and what a new system could bring you is going to help you get that buy-in. So making sure you have a project team relevant to the project is a really key starting point. The next thing that you want to discuss is, I've sort of alluded to, is understanding what you need to be included within a new system. So I would say 95% of organizations that we talk to, the key thing or the key reason that they're having a conversation with us is around the reporting. There's a few other things on the slide here that I'll run through as well, but reporting is typically the biggest challenge an organization faces. That could be management reporting, as I've already alluded to, but it could also be statutory reporting, could be IFRS, it could be, if you're financial services, some sort of FSA or FCA reporting. If you're a charity in the UK, it could be SOFA, SORP reporting. It could be international GAAP. It could be a whole myriad, depending on the sector that you work in, of compliance that you have to do from a reporting perspective. We also see, again, in the charity space, a lot of organisations will have to report back to donors. They'll have received money, and they'll have to report back to donors, in particular donor reporting format. So understanding your reporting requirements, not just from a management point of view, but statutory and any external stakeholders, is key to understand as well. You'll also want to have a think about the quality and quantity of data and whether that needs to be improved. So it could be often when we're having conversations with organizations, when they're, instead of integrating their systems, so you might have a CRM system internally, rather than taking that data over for every new transaction, they'll summarize it and post that as a month-end journal. We see that quite a lot of the time with hotels. We'll see that with a number of different types of organizations where they won't be taking daily or more regular data files over. They'll be doing it once a month, and as a result, that restricts the data that you have access to from a reporting perspective. So you want to have a think about the quantity, whether you summarize, how often you take data over from other systems. You'll also want to have a think about the quality as well. So making sure that you have a system that can help enforce data integrity. So things like being able to have business rules within the system, being able to check, okay, if I'm analyzing by employee, that I can invalidate the employee is sat within a certain cost center, or potentially a certain division and department code are validated against each other. So making sure you've got that quality of data and having a system that'll help maintain that quality as part of your day-to-day data management. You'll also want to have a think about your multiple, whether you've got multiple legal entities and considerations around that within the system. A lot of the time we talk with organizations where they've got say 2, 3, 4 legal entities. Our largest customers have over 1,000 legal entities. More commonly we're at the 5 to 10 legal entity size when we talk to organizations, but you want to have a think about how that works. Do you have consolidation? A lot of organizations, that's a requirement where you want to take data from a number of subsidiaries and have that roll up. You may even have multiple hierarchies where that data rolls up into a smaller subsidiary, and then that rolls up into a parent company reporting as well. So you want to have a good understanding of the requirement there. Also have a think about intercompany. What are the volumes like there? Is that something that you want to have automated in your new system as well? We've got a couple of different options depending on volumes around there, but understanding the requirement there is key. You also want to have a think about, again, I've touched on this mainly with the reporting, so I won't go into this in a whole lot of detail again, but understanding that management reporting requirement, that tends to be the biggest requirement that we see, although I've spoken about statutory, etc. Reporting, day-to-day management reporting, as well as ad hoc reporting is key for many organizations. Make sure that's documented as to what you need there. I've touched on regulatory and statutory reporting. I won't go into detail on that again. And then the final thing to consider is are there any other areas that you need to include? So, and this will be one of the things that drives whether you think about a financial management system, just an accounting system, which works for a lot of organizations, or whether you should be considering something that's wider, an enterprise resource planning tool. The one we provide is Oracle NetSuite, and it's designed to cover your whole organization in a single system. So things like, as I mentioned earlier, your financials, obviously, but then outside of that, things like inventory, human resources, warehouse management, treasury, customer relationship management, all of these areas of the business that you may have, operations, project management, all that good stuff. Do you want that in a single system, or do you have other systems that you're using to manage and you want to interface? So have a think about that as well as a requirement. So once you've understood your requirements, you then want to start understanding high level which systems will meet your requirements. There's a lot of resources online available to help you with this. Check out our website. We do a lot of blog content, blog posts around this. Obviously, you're attending today's webinar, and I'll have a couple of recommendations for you very shortly. But do your research, understand what's available to you within your space. Another good recommendation is having a chat with colleagues, and both within your organization, if you've got a finance team of 2, 3, 4, 5 people, a number of your colleagues may have experience with different accounting softwares. It could be that they have recommendations as to what might make sense for your organization. It's also worth trying to find out what your competitors are using or other people within your sector. This is easier, tends to be easier within the not-for-profit charity sector, where organizations are a little bit more open and they don't see each other as true competitors. You can pick up the phone and have a chat with one of your competitors, and it's more of a friendly conversation, I found, typically. But tips and tricks outside that, have a look at job postings if they're hiring for new members of the finance team. We had a lead about a month ago where we'd just signed an organisation up. They were looking to add a new head to their finance team, and one of their competitors saw the job advert and gave us a call because they wanted to have a chat as to how we could help them. So have a look at job listings. That can be quite a useful way to find out what your competitors are doing. Once you've got sort of a long list, I'd recommend that you shortlist down to 3 to 8 or so that at a high level could meet your requirements from having read through websites, having done your research online. You can then, once you've done that, look to shortlist, and we'll go through the demonstration process and talk about that in a little bit more detail very shortly. Just a little bit of background. I'm going to mute. There we go. Moving through on to the next slide. Another consideration for a lot of organisations is whether you go out to tender. So I'd say there's a number of pros and cons. You don't have to go to tender. I'd say the majority of organisations that we talk with, probably 8 or 9 times out of 10, there won't be a tendering process. That said, there are positives to doing a tendering process. It does provide you with a lot of detail. It clearly forces you to put pen to paper. That sort of first process of gathering a project team and understanding your requirements, it can help force that conversation internally and making sure you have a very clearly outlined set of requirements. It can also be useful to weed out vendors or suppliers pretty quickly. We'll have tenders come through, and within half an hour of having read through them, we'll know this is a really good fit for us, or actually it's not outside. It's outside of our space where we operate. So having a tender document can help sort of with your selection process with suppliers. It can also give you a better structure around deadlines and next steps. a lot of the time with projects like this, it can be difficult to get buy-in and drive the process forward. If you've got a clearly outlined set of deadlines and next steps that are agreed upon by your project team internally, management board, other members, department heads, etc. If everyone's on the same page about deadlines, that can really help stick to those deadlines. Inevitably, I'd say with most tenders, the deadlines are still drawn out, but tenders do tend to help drive the process forward in a more structured basis. It's also a way to measure your success at the end of the project. Having that clear set of requirements, document set of requirements, means that when you go live on the new system, you've got that checklist of, okay, we've gone live on the new system. Have we met what we set out to achieve at the beginning of the project? And then finally, another pro to mention is it can open it up to a larger number of vendors who can bid. A lot of the time, organisations that we work with, particularly in the public sector, government, non-departmental government organisations in the UK, as an example, they have to post it on a public tendering forum. That can be a good way to open the bid out and get more vendors involved in the process. You would obviously, I'd still say if you're doing a tendering process, I would still suggest that you go through the previous steps, have an idea of the vendors that you want to shortlist, and then make sure you reach out to those vendors and shortlist and make sure they respond to your tender and know where you've placed the bid, how to respond to it, all that good stuff. So some of the cons, it's very difficult to do well. I would say a lot of the tenders that we receive are sort of boilerplate. They're sort of people download an online tender and it doesn't reflect the requirements of the organisation. So it sort of becomes a document that sometimes doesn't always, especially if you're using a boilerplate starting point, reflects the actual requirements. So if you are going to be doing a tendering process, make sure what you set out to achieve in the tendering document reflects what you need as an organisation. I would say as well, throughout the tendering process, you want to have a think about, if you are doing a tendering process, the weighting of your requirements. So understanding you don't move systems to improve your payment run process. You don't move systems to improve your bank reconciliation process. You're typically looking to move because you've got a bigger ticket, a larger problem that you're looking to solve. So making sure you have an understanding of that requirement and having that clearly documented and having that as a key point within the tender, because that often gets lost when we see tenders that come across that we get asked to bid for. Another downside to tendering is it doesn't always give a true flavour of the product. You don't get to see the user interface. You don't get to see, or even if you ask for screenshots, it's not a great way to get an understanding as to how user-friendly the software is. It's very, very time consuming to carry out well. If you're going out to market, and sometimes we'll have organisations approach us, they're going out to 8 people to fill in a tender response. They've got 200 questions in the tender, and reading through that many responses is very, very time consuming. It can be difficult to differentiate which systems sort of stand head and shoulders out above ahead of other organizations. It doesn't give you that realistic feel as to how you'd use the software on a day-to-day basis, and that until you get to the demonstration stage, I would say. And the final thing I'd caution around this is getting third parties involved. It really can be a mixed bag. Sometimes third parties can run it very well, but I would say that is the exception to the rule. A lot of the times, third parties that you get involved in the process, they will start with that boilerplate tender response and use that as the starting point, rather than taking the time to understand your requirements and using that as the driving force for the tender document. So be cautious about getting people external to your organization involved in the process. You want to have an idea that they'll have done it several times before, their track record, etc., before you engage with them. So if you don't tender, what should you do? So as I said, the majority of organizations that we work with don't go through a tendering process. They might have a higher level sort of list of 20 requirements, and we'll work that into the demonstration, or do a light response to the requirements. But most of the time we're talking to organizations, they don't go through that extensive tendering process. So what I would suggest that you do is you shortlist down to somewhere between 1 to 3 companies. This is once you've done your research, you've got that long list. Have that initial sort of half-hour call with each of the vendors that you want to have a conversation with, and shortlist down to 1 or 3 suppliers. The reason I say 1 is that sometimes organizations will have more than one product. We, for example, if you wanted to look at 2 accounting solutions, we offer Infor Sun Systems and Oracle NetSuite. So I'd always say you want to have a look at 2 products at a minimum, and with an organization like ourselves, you can look at 2 products with a single supplier. So shortlist down, as I just mentioned, you want to spend some time with each supplier so that they can understand your requirements. Suppliers will often refer to this as a discovery call or a requirement session, but we like to spend about 30 to 45 minutes getting an understanding of what are you doing for process management, how are you managing expenses, purchase approvals, how are you handling currencies, consolidation, how are you doing integration, what level of analysis, what do you need to report by department, cost center, project, event, employee, getting an understanding of why you're looking to move systems is going to be key for your potential new supplier. Once you've gone through the requirements call or discovery call, I then recommend going through and spending a couple of hours, I'd say 90 minutes to 2 hours or so, getting to understand the product with the vendor. You really want to focus on the top 3 to 5 requirements, and then making sure that the demonstration focuses on that. You don't want to do a demonstration that isn't tailored to yourself, that's sort of generic. This is the product day to day. You really want to make sure that you focus on these key points to make sure that they're going to be resolved when you go live on a new system. Once you've got an understanding of how your requirements would be met and what the software looks like, how it would work, make sure you get a reference from an existing customer. The purpose of this isn't to get a demonstration from the customer or see how it works in the real world. Your vendor should be able to give you a really good idea of what the software looks like and how that side of things work. The main purpose of doing a reference call is checking that the supplier lives up to the promises that they're making in the process. So things like, did the project go to the expected timelines? Did the project remain on budget? How is the day-to-day support that you receive after go live? You want to make sure that the supplier is living up to the promises that they're making throughout the sales process. So we'll often, when we're going through the process with the organizations that we work with who are looking to evaluate new software, we'll give them 1 or 2 customers that they can have a chat with, understand what the implementation process was like, what our support team's like, how we handle things post go live from an account management perspective, understanding how you're looked after, because it's not just going live on a new system, it's also making sure that you're looked after on the new system. If you have new requirements, you evolve as an organization over time, you grow, you have new departments, you have new processes that you need to cater for. How does the system grow with your organization, and how are those requirements met longer term? So speaking with an organisation that's been through the process with a vendor can be a really good way of getting an understanding of what the experience could be like. And then the final stage of the process is going through and reviewing contracts with your supplier. If you have one with your legal team as well, or senior members of management, CFO, MD, depending on who takes responsibility for legal matters internally. Don't be afraid to challenge items on the contract. Although we have some items that can't be changed, things like public liability. Our insurance company as a supplier requires us to have certain things in place for us to have business insurance. So there are some things that we can't change. However, there are some things that we can change. So if there's something on the contract that you don't understand or you want to get into a bit more detail on, don't be afraid to raise that as a question to your supplier. So that's sort of high level, the selection process. So moving through on to who you should include in your evaluation process. Now, when we talk to organizations, I would say broadly speaking, there are 3 levels of accounting software. There's sort of tier 1 or the enterprise level of the market. This is sort of organizations turning over often 100, 200 million plus. That tends to be, although we do have organizations all the way up to 1.5 billion, I think is our largest customer, that's GBP. But usually once you get to the £200,000 a year turnover, you start to get into the realms of looking at one of the bigger ticket options available on the market. And that's typically something like one of SAP's or Oracle's bigger product offerings that they have available. We have then the middle tier of the market. So this is the majority of organizations that we tend to work with. I'd refer to this as sort of tier 2 or mid-market. And I'd say this spans anywhere from about 3.5 million GBP, 5 million US dollars, all the way up to about that ceiling I mentioned, 200 million pounds or dollars a year, where at that point you're crossing over into tier 1 potentially. So if you're within that sort of fairly broad turnover range, 3.5 million to 100 million GBP on an annual basis, there is a breadth of products that cater to that section of the market, of which we offer two products within that space, both Sun Systems and NetSuite being aimed at this mid-section of the market. At the lowest end of the market, so if you're sort of sub 3.5 million turnover, we tend to find one of the smaller products will work. So something like your Xeros, your QuickBooks, your SageLine 50s, those products work very well for that end of the market. I would say a lot of the time it's both complexity, but it is also the budget that you would need to have assigned as a result of the size of your organization. There is sort of a loose correlation between the size of the organization and therefore the complexity of the organization, which then therefore drives the type of accounting software that you should be looking at. So this is sort of generally speaking, but in my experience, you'll fit into one of these 3 categories. You'll then want to have a think about whether you go down the route of enterprise resource planning or a financial management software, so ERP or FMS. That said, you don't necessarily have to exclude an ERP because it doesn't have elements or because you have other systems internally. It could be that you're looking for maybe the accounting part of the enterprise resource planning tool and perhaps the HR side, but you've got a CRM system, a customer relationship management system that you'd want to integrate with the ERP. So you don't have to necessarily use every module within your enterprise resource or potential enterprise resource planning tool. You can potentially use mixtures of solutions as well. And then the same thing on the FMS side of things. Again, if you're looking at HR, it could be that you want to consider a new accounting software and then also a separate new HR system that is tightly integrated. So options for you to consider there. Sometimes you'll go down the route of a single system that's integrated out of the box, or you'll go down the route of multiple systems, but making sure that you've got to focus on having the systems able to talk to each other. You also want to have a think about whether it's a short-term or a long-term solution. We do a lot of work with startup organizations where they're pre-revenue. So we do a lot of work with hotels that are sort of the building's not being built, or startups where they've got funding and they're still building the product. It could be the case that you before you reach a revenue stage, there's something like Xero or QuickBooks will tide you over for the first 6 or 12 months. But is that cost effective if in 6 or 12 months you're going to be forced onto a mid-market accounting system depending on your growth plans? So have a think about that as a consideration. If you're at the £5 million turnover, it could be that Xero will hold you for 12 months, but there's going to be a lot of workarounds that you'll potentially be doing, taking data out to Excel, manually manipulating stuff. So is that worth it in the short term? That's a question to have a think about. And a cheeky plug at the bottom there, have a chat with us. We speak with a lot of organizations every week looking to excuse my doorbell if you can hear that in the background. We speak to a lot of organizations looking at switching accounting software. As you can hopefully tell from the presentation today, we take a very consultative approach to working with organizations, understanding your requirements and making sure that we have a good fit with what we're able to offer. So if you're thinking about switching systems, I'd love to have a chat with you or someone in my team to see what we can do to help you in your selection process. What should you budget for? So I've sort of given some figures earlier that alluded at some of the costs or a range of costs that you want to be considering. So if you're within that mid-market area, we see organizations year one starting at about £10,000, £18,000 to £20,000 year one GBP investment with an ongoing recurring fee of £1,000 to £2,000 at a lower end, 10,000 if you're looking at something like cloud on an annual basis. So that sort of tends to be where the mid-market offering starts, and then it goes up from there. So if you're a 10 million, 50 million turnover organization, you probably wouldn't be looking to spend 20 million. You wouldn't be looking to spend 20,000 year one. It'd probably be a little bit higher than that, maybe 40, 50,000 pounds year one, and then maybe something like 5,000, 15,000 pound a year thereafter. So it's driven by the number of users, it's driven by the functionality you need, it's driven by your complexity. I'm happy to, if you want to get into some specific pricing, we can run through, do a 30 minutes requirement call, and I can put together a ballpark estimate for you off the back of that as to what the likely spend would look like for you. That isn't necessarily the only spend that you want to consider, however. So there's a few things. When we put together quotations, we put together as comprehensive quotations as we can. So we'll include things like any software costs, we'll include the implementation side of things, so understanding your requirements, working out a blueprint for the design of your system, training as part of the implementation, user acceptance testing, any integration set up with other systems, setting up any of the optional modules that we have available. So we'll give you quite a comprehensive quote if you wanted to have a chat. One of the things we don't tend to, if you're not going in our cloud solution, you'll also want to have a think about hardware. So NetSuite's cloud-based out of the box. Some systems you can either go cloud or you can go on-premise. If you want to go on-premise, you'll then need to have a think about servers and the cost of that, the ongoing cost of maintenance, etc. You'll also want to be aware of the annual fees. So if you're looking at software as a service, a cloud-based offering, like NetSuite as an example, there'll be an annual fee, but also potentially support fees, cloud hosting fees. If you're looking at something like Sun Systems, I can give you an idea of all the costings if you wanted to have a run through. So last couple of slides, and please feel free, if you've got any questions, pop them in the chat. I'm happy to take them now or as we open things up for questions at the end. But last couple of things to consider. So when's the best time to consider switching? There's two main considerations, I'd say, around this. So a lot of organizations your immediate thought may be year end. That can be quite a natural cutover point in the year. However, that isn't without its challenges. Often organizations at the year end, you'll have a number of processes and tasks at the year end that add to your workload. So things like your year-end processing, generating year-end reports, potentially auditors shortly in after that, potentially budget season, depending on how that lines up with your financial year. So there's quite a few things to consider around that as to whether you'd have resource available internally to support a project. That's with that in mind, a mid-year go live can work out better. There's pros and cons. Obviously, if you're doing a mid-year go live, it then means you've got year-to-date transactions to load, which would require extra resource. But hopefully, if you're doing a mid-year or a quieter time in your year, that can mean that maybe that resource is more readily available to be doing that extra piece of work. You also want to have a think about staff availability. So things like if you've got maternity leave, you've got summer holidays, Christmas. We're doing a lot of work with organisations at the moment where we're trying to take them live end of December for a December year-end go live, or organisations looking at March year-end. We're starting to have those conversations and close many of those conversations around about now. But if you're thinking about a busy period of the year, just factor that in from a staff availability perspective. In December, for example, we've got a lot of organisations that want to go live 2nd, 3rd of January. We've got the Christmas period and they close down 2 weeks over Christmas. So you just need to be conscious of that and how that'll impact project timelines. You also want to have a think about other internal projects. So maybe you're implementing another HR system internally. Maybe you're implementing a new hosting or cloud solution internally. There will be that takes up extra resources internally. So you want to have a think about any other internal projects and how they might potentially impact a project for implementing a new accounting system. But in reality, the best advice is whenever your team has capacity to support a project. Another thing to think about as well is you don't necessarily have to just use your existing team. Some organisations that we work with, instead of waiting for a quieter period of the year, they'll take on a temporary contract resource to backfill a position. So they'll have someone in their accounts payable team that will become the project lead, and then they'll backfill that position with a temporary contract worker for 2-3 months while the contract is on, while the implementation is ongoing. So the last couple of things to think about: how easy is it to swap over accounting software? Generally speaking, it is pretty easy. If you're working with a supplier that has done it many times before, they should be able to take a lot of the stress out of the process. There is work involved from your side. There are a number of key areas that you'll want to have a think about, and you'll be more involved in the process. So things like, from your perspective, the first primary main consideration that you'll be involved with is around the design of the new system. So working with your vendor to sit down and to help them to get a proper understanding of your organization's requirements and what we can therefore do within the new system. So that'll be a main sort of touch point that you'll be involved with. Another key area that you'll be involved with is around the staff training. We'll do 3 days, 4 days, 5 days training, depending on the modules that you're implementing. Sometimes it's more than that for larger teams. But there'll be a number of days that you'll need blocked out as part of the implementation to help your staff members get up to speed. That'll be another consideration for you. I'd say the biggest part of the project when you're going through an implementation from an end user perspective is the user acceptance testing phase of the project. So this is once you've had the training, going through and making sure that the system works as expected, it fulfills your requirements, and that when you're using it day to day, it works. Because what we, as a supplier, when we take you live with a new solution, we really want to de-risk the project, and we de-risk the project by making sure the user acceptance testing is as thorough as possible. And for organizations we work with, we'll provide them testing scripts that can be a really good way to help you through the user acceptance testing phase. Things like post accounts receivable journal, post accounts payable journal, run a report to test that the journals come out into your reporting as expected. So we've got a number of scripts that we provide for organizations to help them make the process as smooth as possible. Some other considerations that you want to have a think about is the data that you take across. If you're going mid-year, inevitably there will be a little bit more data migration for year-to-date reporting to enable that. But the majority of the time we'll work with organizations to load opening balances. And then if organizations need further historic data, we'll give them templates which we can upload. They can use to upload that data themselves. So something to think about there is the volume of data that you need coming across from your old system. Also, you want to have to think about what happens to your old data. If you're not taking it across, if you're only taking across opening balances, how are you going to access that old data? Some systems will provide a single user read-only license, which can be a good way to retain access to that historic data. In the UK, as an example, organisations are required to retain access to the data for 7 years. So if you've been operating for longer than 7 years and you've got a volume of data, realistically you won't take it across into your new accounting system. Certainly at a transactional level, it would just take you too long, and the benefits outweigh the potential costs. So you want to have a think about how you're going to store that data. Maybe you're going to dump it out to Excel or a SQL database or Access database, something like that. Or maybe you're going to look to retain a read-only license for your existing system. And the final thing to have a think about, and again, this is something I'd stress and I raised at the beginning of the presentation, is the cost of not switching. We often work with organizations, and the biggest reason organizations don't move forward with a project is they don't do anything. And they come back to us in 12 months' time, and they'll have spent the last 12 months struggling, frustrated with inefficient processes, manual reporting, not able to get access to their data. Really have to think about and build a business case internally that can help that cost of not switching. Briefly speaking about business cases, we have one available. If you're looking to put together a business case internally for management internally, I've got a business case that I've written and we've worked with on a couple of organizations that you can use as a generic starting point, and that can really help you get buy-in as you go through the process, both from a management and a board perspective as well. If you'd like that business case document, drop me an email after or reply. We'll be doing follow-up emails and calls. Mention to the person that follows up with you that you'd love a copy of the design document, business case document. We can get that forwarded over to you. So last 2 slides here, just some hints and tips. So this one here is for the demonstration that you do with your supplier. I have a think about the agenda. So when we talk to organisations, and we do that first, the requirements call, you want to have a think about those 3 to 5 key reasons that you're looking to switch accounting software, and make sure that those items are on the agenda. As I said before, I'd stress this point again, if you're switching accounting software, you want to make sure that it's going to be a good fit, and the reason you're switching should be top of the agenda when you're doing a presentation with your potential new vendors. You want to also, and we do this for our organizations, we find this works really well, is providing a report that you do at the moment that perhaps is time consuming, that is very manual to produce, and seeing whether the vendor can supply that and demonstrate that back to you. When we do demonstrations, we'll try and get a management reporting example, an Excel sheet that perhaps is taking 3 or 4 days for organizations to put together, and we'll play that back in the demonstration. On the Sun System side of things, we've got a really good Excel add-in that allows us to get the data straight out into that Excel format, right click, update, refresh the report, saving you 4 days if that's how long it's taking you to do it at the moment. On the NetSuite side of things, we'd look at showing you a version of that report within the core financials module and how that side of things works as well. Make sure you keep the presentation engaging. You really want to be asking questions both throughout the presentation and software demonstration, but also if you have any follow-up questions, making sure you have those answered before you sign off. You want to have as good an understanding as you can for the accounting system before you implement it. And then last thing before I close off, last few tips here. Make sure you negotiate with your supplier. If you don't ask, you don't get. Have a chat. Suppliers value honest feedback. Keep them in the loop throughout your process. They can help, and we really value honest feedback. If something hasn't come across, or you've missed something, or sometimes we'll have organizations say, okay, we didn't see this within the presentation, this is key for us, and we'll come back and we'll do a second demonstration that just focuses on that requirement that we didn't cover. So if something's been missed or something that you haven't seen as part of the presentations, make sure you bring that up. Your supplier or potential new supplier will be more than happy usually to do another session with you to help you with that. And the last hint and tip, again, this is a bit biased, but book a call with us. I'd love to have a chat, see whether we can help and how we can help support your selection process. The majority of the team have got a lot of experience helping organisations switch. I've been doing this for 11 years. Rory, who was meant to be doing the presentation today, has been doing it for 7 years. So have a chat with us. We'd love to see what we can do to help support your selection process. So I'm going to close up there. Thank you very much for attending, everyone. We'll be following up, as I mentioned before, after the presentation today. We'd love to have a chat with you and see how we can support your process going forwards. And that's it for today. Thanks very much for attending, and we'll be in contact in the future.